Hey everybody, I'm Tim Rhey with True Rate Mortgage Group, and today I'm going to do something a little bit different. I'm going to break down something very, very compelling that happened this week. Our friend Barry Habib, who runs MBS Highway, was asked to send a letter to the President of the United States of America to clarify what the heck the Fed is seeing in inflation. Now, Barry is the guru. He's the go-to. He knows the market, and he was asked to put together a letter that the president would read. And I want to break down that letter because I think it's really, really, really interesting. First thing is Barry talked about what is the problem with inflation currently. Now, the Fed's go-to inflation measurement, as we always say, is called the core PCE. Right now, it's sitting at 2.8%, and the Fed's target is 2%. Keep that in mind. There's another big measure called the core CPI. There's so many of these three-letter acronyms. Anyway, CPI. It's at 3.25%, also over the target. Now, these numbers are driving the Fed's actions. In other words, these numbers are keeping the interest rates high, and they're doing that on purpose because they're trying to control inflation. But here's the twist. These numbers are kind of misleading. Here's the first big reason why. Number one, shelter costs. The problem with shelter costs is that they make up a huge part of both of those numbers, the PCE and the CPI. Shelter makes up 18% of the core PCE, and it makes up a whopping 46% of the core CPI. So a large chunk of those readings is coming from shelter cost. Now, right now, the government is measuring shelter cost like rent using methods that frankly are just outdated, and they don't reflect, wait for it, real-time changes. The data lags behind reality by about a full year. Now, here's what that means. You have real data and you have government data. Government reports say rents are up about 4.6 to 4.8%. But real-time data like Zillow and Apartment List show that rents are actually only increasing by 1.5%, way less than what the Fed's data suggests. Who's right here? This is a huge gap, and because of it, inflation is being overstated, which means interest rates are higher than they should be, making housing less affordable. And guys, that's what this all comes down to. We are trying between the mortgage rates and between loan products and home prices. Really, at the end of the day, I think we're just trying to make housing a little bit more affordable for people. Now, Barry's article goes on to explain the fix. Barry suggests that if the government would just use real-time data on rents, the inflation numbers would be much lower. If we factored in those real-time numbers, we would be at our target right now, and that would paint a more accurate picture of inflation. With better data, the Fed would likely cut rates and bring mortgage rates closer to maybe 6%, which would make housing affordable. Now, keep in mind, when the headline reads 6%, I think the floodgates are going to open. So if you're shopping right now, be ready. If you're on that starting line and you're waiting for it, the minute the headline reads 6%, I think we're going to see an influx of competition. Competition will obviously do its thing. We know how that works. So here's the wrap up, guys. If you take anything from this, just keep in mind, like, all they're saying is, and all the article is really saying, and I love this letter, by the way. I will post a link to the letter for you to read. I will send it to you if you'd like. But all Barry's saying is, like, let's update how we measure inflation to reflect what's really happening in the market. And if the Fed did that, we would see a more stable economy and lower housing costs. Well, that's the gist of the letter, guys. I'm Tim Rhey, True Rate Mortgage Group. If you want to talk about it, go over it, or plan on your situation, give us a call. Timing is everything. When are rates going to come down? Where are rates today? What if I buy now? When can I refinance? What's a 2-1 buy down? There's so many things going on right now. We're happy to discuss all of those things with you. I hope that President sees this letter because it could very well help our rates. That's it for this episode, guys. Have a wonderful day.